Welcome to Alan Berry Reports TV. I'm your host, Alan Berry Labucan from AlanBerryReports.com. So today we had some pretty big pullback in the market. Seems to be trading on a lot of fear today, and I wanted to talk about that on today's show. Just to sort of put things into context, what I've been seeing happening is in the run-up to the what this all seems to be a reaction to is the deal that the White House and the Congress and politicians on both sides seem to agree to regarding the default or the potential for a default on the debt. And what happened was it seems to be that President Obama had the opinion or polls in his favor. It seemed like the Main Street or the average citizen out there was wanting to see a combination of higher taxes for the upper income earners, let's say over $1 million annual income, and lowered spending. And instead, President Obama seems to have caved into the pressure from the Republican Party and did away with the raising of the taxes on the higher income earners, and seems to want to deal with the debt situation by just cutting spending. And oftentimes Main Street and Wall Street seem to go in different directions. In this case, it seems that, if you look at the reaction from Wall Street regarding this deal, it seems that Wall Street was in agreement with the Main Street, and they wanted the same kind of thing. That balanced approach, although it wasn't perfect, I think it was much better than what the net result is. If I was giving advice to the politicians, and obviously I'm not, I would have looked at raising taxes on the upper income earners, strategically lowering spending in certain areas, especially on defense. I think that those wars are just beyond too expensive, and need to bring those boys and girls back home, and maybe look at utilizing their services more in protecting from within than protecting from without. But you know, that's not my position. The other thing that I think could have helped is lowering capital gains taxes. Now, the reason I say this is because the Bush tax cuts seem to have been really dismal at creating jobs and economic growth. They've been much more effective at widening the gap between the rich and the poor. On the other hand, I think that it would have been much more. I think that lowering capital gains taxes is much more effective at creating jobs. The bottom line is that this is what the economy needs. It needs to gain some confidence that in the economy, and start creating jobs, and that will help the housing market and the overall economy. And so, you know, I think that in this case, both Wall Street and Main Street had it right. And so now we've seen this big sell-off after the agreement was put into place from the politicians on both sides. And so there's plenty of fault or blame to go around, regardless of whether you're whichever side of the political fence you're on. I think that you can throw blame at both sides, but that's really not the focus of what we're looking at here. We're trying to focus on what's happening on the markets. There is a relationship between what happens with politics and what happens in the markets, and we're seeing that play out in the last few days. What we've seen happen is it's that what they call risk-off, risk-on trade. And I don't quite understand what they mean by risk off, because when the risk is off, it seems that investors are going towards investing in the U.S. dollar and U.S. debt. And to me, those two assets are very risky. But it seems to be when the risk is off, they want to chase towards that. And when risk is on, the market participants seem to be chasing after high-quality stocks, commodities, and that sort of a bent. And I think that that's where the risk is actually off. But markets can get really wonky when there's big sell-offs, and I think that's what we're seeing happening here. As I said earlier, since the deal was done in Washington, we've seen commodities and stocks get beaten down pretty aggressively. And again, U.S. debt and dollar seems to be the hiding space. I still don't get that. I think that that's a much riskier trade, but this is what we have. Now, what I see also is that the fundamentals are poor for the U.S. dollar and U.S. debt. Anytime you have an asset, in this case the U.S. dollar and U.S. debt, that there is abundant supply and suspect demand, when you go long those assets, that is a risky trade. And that's where we sit with the U.S. dollar and U.S. debt. There's more than ample supply of both the U.S. dollar and U.S. debt and suspect demand. Now, in the last couple of days, we've had some pretty good demand. I think that that's going to change course pretty quickly. On the other hand, you look at when markets get like this, you always want to look back on the fundamentals. And what has good fundamentals? And in my opinion, that includes high-quality stocks. We're seeing a lot of big cap names on the S&P 500 that actually have pretty outstanding looking bottom lines and earnings potential and earnings growth. And it's those kind of companies that we want to be looking at. Also commodities. Commodities by and large have gone through a long periods of underinvestment in the supply chains. So the supply chains are subdued, and the demand is solid. And so those are whenever we see these kind of market volatility, we always want to go back to the fundamentals, because usually it doesn't take very long before these situations are resolved. For example, whenever you see a stock or a market spike upwards or downwards, which is what we're having today or the last couple days, is a real spike downwards. Those spikes rarely last for very long, and the rally in the opposite direction is coming quite quickly. Now, we've seen the spike down in this case in the stocks across the board. Commodities, resource stocks are all getting beaten down, and those spikes are, like I said, are usually over fairly quickly. And we think that this one is almost over, if not already over. Going forward, it looks definitely like the stock market in general, commodities are oversold and primed to rally. I think what we're going to see happen is in the overnight markets, in overseas markets, we're probably going to see a sell-off as well, and then that will likely carry over into the first early parts of the markets in North America tomorrow. I'm taping this in the afternoon of Thursday, August the 4th, and so I'm talking about in the morning of August the 5th, Friday. So what I'm expecting to see is there might be some more downside pressure, but I think that after the early parts of the market tomorrow, you'll probably start to see the beginning of the rally in the opposite direction of this big sell-off that we've seen. I think that you're going to see high quality companies in the S&P 500 that have solid balance sheets and good earnings potential will participate in the rally, as will commodities and resource stocks. And I think that those are the ones that are best positioned to rally off of this overly emotional market that we're seeing in the last couple days. And so we think that things will get back to fundamental reality with a rally in the S&P 500 type stocks and commodities and resource stocks. And so just wanted to put this together and for you folks. Before closing, I always like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own homework and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and any efforts you make to refer people to our shows, our website, and our reports would be greatly appreciated. We have some thank yous we always like to do. We use YouTube.com as our primary platform to produce and broadcast these shows. So we want to thank them. We also have, if you're watching the show on our website at allenberryreports.com, you'll notice to the left and right of me that we have banner sponsors. Those banner sponsors are really important in us being able to do the work that we do and bring these reports to you at no charge. And so thank them. And if you want to check them out, just click on their banners on our website and it'll take you directly to their websites. And of course, to you, the viewers, without you, we wouldn't have a reason to do the show. So thank you very much for tuning in. That's it for today's show. If you want to find out all our work, you can find it on our website at allenberryreports.com. We hope you can join us soon for our future shows. Have a great day. Enjoy the summer, and we'll talk to you soon.